Hello, I'm Angeline Ong and welcome to Beat the Street, the show that gives you all the tradable news and data you need to know ahead of the Wall Street Open. Coming up, safe havens in focus amid the rising tensions in the Middle East. We're keeping a close eye on developments there for you. The earnings deluge continues. On deck, Netflix, Tesla, Goldman Sachs and Morgan Stanley, all due to report this week. And big news in the pharmaceutical chain space. Rite Aid has filed for bankruptcy protection amid weak sales and opioid litigation. Now, good afternoon. I'm Angeline Ong and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading, this is how equity markets are looking. We're seeing quite a bit of caution there. Has to be said, though, we're not seeing a huge amount of risk off, at least on the Wall Street markets just yet in a big and meaningful way. However, it is still early days. The situation on the ground in Israel and Gaza is intensifying, and there is now this expectation of a likely ground invasion in southern Gaza. As I mentioned earlier, all this could change things quite rapidly. Just checking in on the volatility index for you because it has spiked up just a touch recently. Let's take a look at the hourly chart for you. There you can see it better on the hourly chart, and volumes, as you can see there, have returned. What's also interesting is the resilience that we are seeing amid these markets, despite what is going on over there as well. Just trying to get up the US 500 for you, especially given it's such a big week on the earnings front. There you have it. This is the S&P 500, otherwise known as the US 500 on our platform. And also, let's take a look at the Tech 100 as well, given we've got Netflix reporting this week amongst the big tech earnings expected. But as I mentioned, we're keeping a close eye on what's happening there. Safe havens are actually benefiting, so the dollar is being well supported. Oil obviously having upward pressure there. We are keeping a close eye on that for you. Yields on long-dated US Treasury notes gain as the US strive to prevent an escalation in the tensions. Secretary of State Antony Blinken arriving in Israel for talks after top US officials warned that the conflict could worsen. Now, the Nasdaq, as I mentioned earlier, has fallen, not as much as you think though, but it has fallen as worsening consumer sentiment data and the Middle East conflict kept investors away from riskier bets and overshadowed some upbeat earnings from big US banks. However, for a longer-term technical view, let's cross over to IG's Axel Rudolph.
The Nasdaq 100 looks really interesting in the US in that it outperforms to this day the other indices, and it did come off last week on these heightened tensions in the Middle East, but not to the same degree as, for example, the Dow Jones Industrial Average or the Russell 2000 did. And you can see this here on the daily chart. Yes, we did falter at the July to October downtrend line at 15,339 and then fell through the orange line here, the 55-day simply moving average at 15,102, and remain below there, which does indicate that perhaps over the next few days we could slide further towards the late September high at 14,905. But provided we stay above the current September and October lows at 14,430, we expect further upsides to be more probable than another down leg being seen that would take us then through those lows. And the reason for that is, even though we are in this downward trending pattern, from a longer term perspective, this is just a correction to the long-term uptrend we've seen since the beginning of this year. So yes, short-term corrective, but as long as we stay above 14,430, for me, from a technical perspective, we remain in a medium-term sideways trading pattern, which could, by the end of the year, become a positive one.
Now, aside from all the earnings that we're expecting, we're also looking out for any signals that could give us hints about the Fed's future path in terms of interest rates. We've got the emergence of renewed inflation risks last week, of course, the rising geopolitical risk out of the Middle East, and also minutes from the Fed's September policy meeting suggested the need for at least one more increase between now and the end of the year. Fed speakers on deck that we are looking out for include Jerome Powell, JP. He's addressing the Economic Club of New York. Also, look out for Neil Kashkari on Tuesday. This is the Fed Bank of Minneapolis president. And on Wednesday, Michelle Bowman, Fed board governor, also speaks. So all this could give us some sort of idea as to where interest rates are heading. And this, of course, will affect tech stocks as well and the high growth stocks. Now, the US earnings season, which officially started on Friday, saw earnings from some of the big banks that were initially quite uplifting, from JP Morgan, Citigroup and Wells Fargo. No expected reports today, but other major banks are expected to post quarterly earnings in the coming session. Bank of America forecast to post earnings of 82 cents per share in the third quarter, down 1% on the same quarter last year. Revenue should reach $25 billion or so, and investors will be especially focused on loan loss provisions, forecast to have risen by 13% in the period. The street also expecting Goldman Sachs to report earnings of $6.13 per share on sales of $11.4 billion. Now, as I mentioned earlier, we're going to see a lot of big tech companies in focus this coming week. We've got Netflix reporting on Wednesday, expecting EPS of $3.51, an increase of 7.6% year on year. Sales expected to rise around 12.5% to $8.5 billion. This was driven by growth in average paid memberships. And also the big one on Wednesday, Tesla. Earnings are forecast to come in at 75 cents per share in the third quarter. This figure that's been downwardly revised after disappointing delivery numbers. Revenue is expected to reach $24.5 billion. Now, if you recall, Tesla has been announcing price cuts, part of its wider strategy to keep the demand and also to keep numbers up in terms of production and delivery, and in a way actually giving the price cuts to try and lure more consumers. This is as the company sticks to its approach of sacrificing margins to produce more vehicles. Now let's cross over to Chris Vecchio now, if we may, from Tasty Live, which is part of IG Group, all the way in New York. Chris, thank you so much for joining us. As I mentioned earlier, we've got a huge amount of uncertainty out there. Obviously, the situation on the ground in Israel and southern Gaza developing as we speak, but also this wave of earnings coming out this week. What's on your radar? What's going to move markets most?
This certainly is a week where earnings are in greater focus than the macro calendar, which in fact is quite dry, quite dull, at least from the U.S. perspective. Retail sales come out tomorrow, but that's really about it among the slew of Federal Reserve speakers, which actually is probably a pretty important event itself because these Fed speakers have been striking a different tone recently. You go back to middle of September and they're talking about how there could be the need for 2 fewer cuts in 2024, perhaps even an additional hike here in 2023. But how that tone has changed. Now we're hearing from these Fed officials that the way the bond market's moved has done the heavy lifting for the Fed. And well, perhaps we are done with the hike cycle altogether. Earnings, of course, will be in focus over the coming days. You mentioned that Tesla is the big one coming up this week. We can't ignore the fact that we also have Bank of America, which has been rumored to be facing some of its own issues thanks to how the bond market has moved in recent weeks and months. All in all, though, it's a quieter calendar than what we've seen, at least from the macro perspective, through the first half of October.
Thanks very much. We'll check in with you in the coming week. I'm sure it's going to be quite a roller coaster of a ride. Thank you very much, Chris Vecchio, there joining us from New York from Tasty Live. Now, staying in the US drugstore chain Rite Aid has filed for Chapter 11 bankruptcy protection in New Jersey and said it would begin restructuring to significantly cut its debt. Let me just bring up the chart for Rite Aid there. As you can see, this company's woes haven't actually, just started recently. They've gone back quite a way if you look at the chart here. And what we have actually seen as well, just coming back to us here because we've got some tech issues with the charts, is that it's reached a deal with creditors on a restructuring plan that includes closing underperforming locations. Rite Aid also, what is key here is they said that lenders had agreed to provide $3.5 billion in new funding to provide sufficient liquidity as it embarks on its restructuring plan. It's been a really tough time for many pharmaceutical chains out there, especially in the US. They've had increasing competition. Why go to a chain like that if you can buy all those drugs at your local grocery store like your Walmart and your Kroger's? But also the lawsuits that allege that the company helped fuel America's opioid epidemic by oversupplying painkillers has been weighing on the company's stock. And finally, I just want to remind you that Disney turned 100 years ago today. The company, which was started by Walter Elias Disney, started his career in film animation, from Mickey Mouse to Goofy and Donald Duck to Oscar-winning feature-length animated movies. Walt Disney was able to witness the expansion that made him a global name in the entertainment business before he died in 1966. The company then went on to expand into full live-action films, theme parks, and computer games. And most recently, Disney Plus has been established to bring in further expansion to an even bigger audience through streaming. Now, before we go, just a quick reminder, we're watching for the latest on the ground out of Israel and southern Gaza as well. In the meantime, your stock index futures, or rather on the IG platform, US stocks are indicated to extend gains slightly, ever so slightly. But as I mentioned earlier, this fast-moving scenario could mean that all this changes in a heartbeat. And that's it for this edition of Beat the Street, the show that follows all the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @IG.com and @Angeline Ong on Twitter. This is IGTV.